All right, let's talk about what's going on in China, Evergrande. This is an incredibly important story to the health of the U.S. economy, your family's retirement funds, and pretty much everything else. We are an interconnected society, right? Forget the fact we're not an island, the United States. We are tightly interconnected to the global economy, the Chinese economy. And I want to start with some breaking news on this morning on this Evergrande story before I kind of give in and take greater detail and explain what is going on with this Evergrande crisis. So Evergrande bondholders have been left in the dark. This is the very latest overnight. Evergrande bondholders left in the dark as a crucial deadline passes. And investors the reason that this is a big deal is because they were waiting on this payment. So all eyes were on what was going to happen with Evergrande to make this payment back. And this $84 million offshore coupon payment that they were supposed to be making. And there's so many people that are waiting on Evergrande to make payments to them. So investors had been sitting there saying they have not yet received a closely watched interest payment that was due on Thursday, adding uncertainty to an unfolding liquidity crisis as the world's most indebted property developer. It was an $83 million payment and had a deadline of midnight in New York on Thursday or noon on Friday in Hong Kong. The property group, which has not made a statement on the repayment, has a 30-day grace period before any failure to pay officially results in a default. So nothing, crickets, quiet. Nothing's going on. No payment. This is just the tip of the iceberg. So Evergrande, which is the highly leveraged real estate company, which is in China, they've got 200,000 employees, and they're basically struggling to make payroll right now. They have 1,300 different projects going on in more than 280 cities across China. They have the largest debt burden of any publicly traded real estate company in the world. And it's particularly significant in China because it's kind of like the leading edge of the real estate boom, which comprises about 1/3 of their entire economy. Just to give you some frame of reference, in 2008 in the United States, the housing collapse that unfolded here, it could have been 10 times worse. But yet the U.S. housing sector is a smaller percentage of the U.S. GDP in manufacturing. But in China, it's 30%. It is a massive piece of their economy. It's such a huge sector. And at the same time, a huge amount of the Chinese public is actually very invested in Evergrande. Think about this for a minute. 1.5 million Chinese people have made deposits to the company waiting on a delivery of a house. So 1.5 million Chinese are like, hey, I want a bite of the middle class dream right here in China. So what I'm going to do is give a deposit for the house that you are going to build me, Evergrande, because you're the biggest. So they've made their deposits, and Evergrande can't even pay its employees. Why? Well, if you look at the company right now, itself has not even been able to barely make payroll. They've been paying out huge amounts of dividends to their shareholders. Oh, and coincidentally, their CEO has also made $5 billion from the companies alone in dividends. One of the richest men in China he is. All of this being said, and the reason why it's very significant is that Evergrande itself, both its bonds as well as its stock, is actually held by a significant number of American companies, specifically private equity guys like BlackRock. So if you think that this is just an isolated thing over there in China, you're wrong. Hundreds of banks, and institutions all over the United States, private equity, many are tied to your 401k plans or retirement plans, tied and have money or are waiting on money payments or other interest payments from this company, Evergrande. All of it is tied together. So imagine you're a Chinese family, right? You've saved up some money. You make a deposit to Evergrande. You go to one of their many locations. Here's my money. I'm putting it in this bank because, we know you're the biggest, right? You're huge. You're the biggest in China. and you're building the homes in 200 different cities across China. You have 1,700 projects currently underway, from skyscrapers to homes to buildings, everything. So I'm waiting on my home to be built. 1.5 million Chinese people probably will never have their homes built, and they will probably lose these deposits. Gone. Poof. If you think about in 2008 in the United States, when our housing market collapsed in precisely the same way. And in what way was that? Well, it was overinflated real estate values, right? Homes in the United States were wildly overinflated. And that meant that banks could package up these ridiculous loans and keep selling them and selling them and selling them, even though they were mostly worthless. People could get loans that didn't have jobs. So it was artificially inflated real estate prices. Someone could buy a $100,000 home and in a month later sell it for $120,000. That's how ridiculous things were, right? And it just kept happening. So they were able to keep doing this house of cards. And then suddenly people start to realize that these home prices are way overinflated. These appraisals are out of control. This doesn't make any sense. The values we're absolutely in a bubble. And suddenly these prices come way down. And now that house of cards, that pyramid scheme no longer works, right? You can't continue to leverage and borrow all of this money against these overinflated assets that just don't exist. They're not real. So guess what? Now all of these banks, Lehman Brothers and otherwise, can't borrow this kind of money anymore. They can't borrow this money because guess what? The asset that they're trying to borrow against is found out to be a flaw. And that's exactly what's happening with Evergrande. That all of these overinflated Hong Kong real estate prices and all throughout China, these overinflated apartment complexes and prices, they're not actually worth that much. And it's a total house of cards, a pyramid scheme. And once you're incredibly over leveraged. So this company has billions of dollars in over leveraged capital that it's continued to borrow against what? And now a lot of these companies are saying, hey, we want our money back because you were borrowing money against stuff that really wasn't valuable and we'd like our money back. Sorry, we don't have it. So in precisely the same way, China owned, back in 2008, China owned a lot of our debt, remember? So when we had the collapse in the United States, it reverberated around the world. Well, now it's the reverse. A lot of Wall Street firms own a ton of Chinese debt in Evergrande. What's going to happen if they go under? So the big question this morning is, what will the Chinese Communist Party do? Will Chinese leader Xi Jinping actually bail them out? Would set an unbelievable precedent, wouldn't it? You know, the way that the Chinese government has operated is these 3 red line strategy. Think of it sort of like American financial bank stress testing, right? But they have 3 red lines. And you are not allowed to borrow if you don't meet these 3 red lines. Well, they have failed. Evergrande has not met the 3 red lines. They have absolutely broken the law. They've broken this stress test. So now what will the government do?
Well, hasn't the government already started putting money back into the Chinese economy, try to shore it up? I mean, because they're trying to. I recently read that they were dumping money into it to kind of like alleviate concerns.
Well, what the Chinese government does, because Chinese Communist Party, what they tend to do is they tend to almost take them under like state control. Where they, right, when they have these issues in the past, they sort of swoop in and in a way, they sort of roll them into another company. They sort of like take them under their wing. And they may try to do something like that this time, not really bail them out so much as kind of absorb some of this inside of state-controlled other entities. Almost I don't want to say a takeover, but in many ways, that's what it looks like. But this is massive. So if how are they going to be able to do that? To take on this much debt to shore? And what they're basically then admitting is, well, then yes, banks are too big to fail. Like the Chinese government has before drawn red lines saying like, no, like, that's the beauty of communism, right? Is that no, we will not do this. And so if they draw this line where they're going to say that we can't have this bank fail. We can't have Evergrande fail. What they're admitting is a failure of communism, right? What they're saying is basically like, well, okay, we're going to step in here and make sure everything's okay. Yes, there are banks that are too big to fail, like in the United States. U.S. banks now know that they can always be bailed out by Wall Street, right? U.S. banks are like, hey, we now know that the government is just not going to let us collapse. We're not going to have another Lehman Brothers. Government will step in. They'll pump billions of dollars. They'll take care of us. We don't have to worry about anything. No one will go to prison. It'll be all good.
I wonder what the status of golden parachutes are in China as opposed to the United States. Like when this goes, under, is it take care of the top people first and then work your way down so that the 1.5 million people that have already put deposits, they're out of luck, but the 5% up at the top, they're gonna take what's left and run.
It's hard to say. I mean, we know that the CEO of Evergrande, $5 billion in profit. So is he going to be forced to give this back?
Yeah, that's what Richard Blackstone said in the comments was if he's worth $5 billion off of this, why doesn't he make that $84 million payment?
Right. Yeah, or the 1.5 million Chinese people who have made their deposits to get a home. Imagine, just think for a second, like as an American, like you go to Toll House Brothers or whatever the builders, and you make your deposit. Like, honey, we're doing this. We're building a home. It's our first home. We're going to make that deposit. We've saved up 20 years. Here's our $70,000 down payment for Toll Brothers to build us a house next year. Here you go, Toll Brothers. And then come to find out that Toll Brothers doesn't have they don't have really any plans to actually build your house. And now the money is gone. And to make matters worse, we're learning this morning in the Wall Street Journal that auditors who looked at Evergrande's viability as a company didn't see a problem. So PricewaterhouseCoopers did this. This is amazing. So PricewaterhouseCoopers did their audit of Evergrande. And in Hong Kong, it signed off on the company's 2020 financial statements. And it didn't include which is what they call a so-called going concern warning. These are red flags from an auditor that show that it has doubts about the company's ability to stay afloat for at least 12 months. It saw no problem. But in the company's financial statement for the first 6 months of this year, Evergrande's board of directors themselves on the board actually wrote a memo, expressed concern about their company's ability to pay back its short-term obligations and its ability to continue growing. That was their going concern. Like the board itself wrote it down. The report then, which was unaudited, was one of the company's first serious admissions of its financial problems. They told everyone about this. Now Evergrande is teetering on the edge of financial collapse. It has $88.5 billion in debt burden and total liabilities in excess of $300 billion in liabilities. And one person who, you think would actually know a lot about this, and we should take him seriously, is Jim Chanos. Do you know who Jim Chanos is? If you're not familiar with Jim Chanos, he's actually the guy, the short seller, who predicted that Enron was going to collapse. I read the book, The Smartest Guys in the Room, about Enron. What a house of cards scam that was. Well, Jim Chanos, he says that the collapse of Evergrande could actually be worse than Lehman Brothers. Here's what he says. Here's what he says in the Post. He says Evergrande just happens to be one of the biggest, but the developers, all of them look like this in the Chinese property market. There's Jim. The whole Chinese property market are on the stilts, he says. You don't have to worry that it's a Lehman Brothers situation, he says, but a Lehman type situation. But in many ways, it's worse than Lehman Brothers, he says. And he says, expect this to reverberate around the world. In many ways, you don't have to worry that it's a Lehman type situation. But in many others, it's far worse because it's symptomatic of the whole economic model and the debt that's behind the economic model. That apparently Evergrande is just one of many structured just like this. And multiple other Evergrandes exist, 2, 3, 4 of them that are just as large. And Evergrande's the biggest, but there are a few others that are quite as big. And they all operate the same way on this overinflated prices, overinflated housing prices, over-leveraged debt with really no obligation to build, and a whole house of cards that's about to come crumbling down, and 30% of the Chinese economy. So this is going to be an absolute disaster. And this all and I don't understand. I mean, this all started happening last year, and they were really trying to. Even the president of China, Xi Jinping, was saying it last year. We want to stop the reliance on debt to fuel our expansion. And if you think about all of this talk about the Chinese economy, it's the biggest it's going to be about to become the biggest in the world. And it's all built on a house. It's all built on a sham. It's all built on a scam. Overinflated housing prices. Being able to borrow all of this debt from around the world. And these properties are not worth what they're pretending to be. And you have an entire continent, basically, that is sitting on this faulty accounting. You don't think you're going to feel this at home? You don't think you're going to feel this here, in the United States in your 401k? It's a crap show just waiting to happen. So please be careful. I mean, look, if you're invested in things like BlackRock, or I would seriously call your financial advisor, look at your 401k. If you've got a retirement plan, look at the different funds that you might be investing in today, things that might be tied. A lot of these firms have debt obligations with Evergrande. You might, on the surface, you might not think that you have any ties to it at all. But I'd be asking questions, because what if they don't get those payments made back? That is a direct hit on you. So many people's pensions and otherwise also connected to this. All of this is, very, very troubling. So please heed this warning. But I got to say, it's pretty weird. It's kind of eerie. There was, where's this article I saw this morning? It says it's kind of eerie. This deadline passes and there's just nothing. There's no, it's all sort of, they passed this deadline without making this thing. And it's very eerie. I think the UK Mail today said that, they're surprised. It's just sort of, it's like eerie quiet. Like, what's going on? They've missed this payment and no one's saying anything. Like, the company's not saying anything. There's no message from Evergrande. It's, they're all sort of quiet. It's just like the calm before the storm. What I don't get is that the U.S. stock market yesterday just took off nicely. They're like, Evergrande, this is going to be like an isolated little bubble situation. Shouldn't be a big deal. I think we're good to go. And just bounces back just fine yesterday. Not a surprise.
I think the reality is, though, for people in Wall Street, it will be fine. And that's the problem. I mean, because there was no real repercussions in 2008. Like nothing was felt by that top percent. It was there's all the people that lost their life savings, their 401ks, they lost everything, all their retirement. And so it's like, yeah, if you look at it like that, they're not looking at it like this is really bad for people. They're like, this is really bad for Wall Street. Then they would panic. But if it's looking good for Wall Street, it is good. It is fine for them.
Yeah. Yeah. They're like, oh, okay, well, I guess, looks like the Chinese president's going to step in all of this. That's fine. But earlier in the week, stocks were down. And then as the week is going on now, it's like, hey, we got over it. We're good to go, I guess. Thanks for subscribing to the channel. You can also become a channel member by going to morninginvest.com/join, where you can stick it to the mainstream media and support independent journalism. We're able to bring you the stories that you won't see on any of the major billionaire-backed networks. Thanks so much. We'll see you next time, everyone.